All right, if you're looking to buy a home in the next 6 to 12 months and you want an interest rate 1 to 3% lower than the quoted rates you're seeing out there, you need to hear this on this episode of Ryan and Real Estate. All right, welcome back. Once again, if you have not subscribed to this channel, our goal is to bring you great information, valuable information. If you could take a minute, subscribe, click the bell to make you get notifications, and leave us a comment so we can know what you're thinking. All right, interest rates, as we know, have been through the roof, and we've seen crazy numbers. We've seen low lows, and now we've seen high highs. So if you're interested in figuring out if you want to buy right now in the next 6 to 12 months, and you want a rate, average rate right now as we're filming this is probably about 7.5% on a 30-year fix. So if you want a rate that's maybe 1 to 3%, and again, I'm not a lender. I'm not telling you this is guaranteed. This is all about, credit, all those different things that come into play. But if you're interested in getting a rate 1 to 3% lower, I'm gonna show you exactly how to do that. So obviously today's high interest rates have got everyone puzzled, but I've got a game changer for you today, and it's called temporary rate buydowns. First things first, what is a temporary rate buydown? So imagine being able to pay a bit more upfront to secure a lower interest rate for the initial beginning years of your loan. Does it sound a little too good to be true? In reality, it's what many smart home buyers are taking advantage of. Now, we don't know how long the interest rates will continue to be this high, but most experts are suggesting at least until next summer before we see a big break. And it could be longer. So how exactly does a temporary buydown work to get a lower rate? Well, let's break it down with an example. So if you've not heard of it, there's a buydown called a 3-2-1 buydown. This is where your interest rate is reduced by 3% the first year, 2% the second year, and 1% the third year. And then after the 3 years, the rate goes back up to the originally agreed upon rate. However, if you decide to refinance in the middle of the 3-2-1, no harm, no foul. So who fits the bill for this? And the good news is that the buyer isn't always the one who has to pay. Sometimes the builder or the seller will offer this as an incentive, this is especially popular in new construction homes or homes that may have been sitting a little bit longer in the market. And here's a cherry on the top. Right now, because of the low inventory, we're still seeing home prices are continuing to rise. If you don't believe me, check out the video from a few weeks ago I did on this. So you're able to get into a home at a lower price than it will be in the next 2 to 3 years. And then when interest rates go down, you can refinance. Look, I get it. The home buying process can be extremely daunting. And with so many numbers and terms thrown at you, tools like the temporary buydowns can really ease your financial stress. And remember, it's not about how much you spend, but how wisely you spend. So if you're thinking of moving, shoot us a message, leave a comment, and we can help you figure out how this works in further detail. The temporary rate buydown is a great option for someone who believes that right now rates are at a high and at some point they're going to lower. And if you look at some of the videos we've had about how rates follow inflation, we are predicting inflation is going to drop, and typically historically rates do drop. This is a great option for you to be able to do it. And here's a great thing about temporary buydowns. Let's just say you did the 3-2-1 and you're in the middle of year 2. Basically, you're gonna take that upfront amount, and I'll show you a little graph here. You're going to put it to pay for this buydown. They're actually gonna put it in kind of like an escrow account. And then as each month passes, they're gonna use that money to buy down your rate as you go along. But let's say you refinance halfway through. The great thing is you get the money you didn't use to buy that down through the whole term, you get it back, and you can use it for your closing costs and your refinance or whatever it might be. But bottom line is, temporary buydowns are a great option. If I was buying a house personally today, I would be looking at either a 3-2-1 buydown or a 2-1 buydown. If you have any questions, as always, we're here. Let us know. Leave comments, and we will see you next time on Ryan and Real Estate.